doesn't matter whether you have one stock or over 30 stocks like myself. Even if you have one stock and you're thinking about buying your second stock, ask yourself, is this money better spent adding to the one stock that I own or buying the second one? And so that's a question you got to ask yourself each time. Hey there, this is Ian from ppcian.com, back with another video about dividend growth investing. So when you're building your stock portfolio, you're building up your dividend growth portfolio, you're adding new positions, the question arises, hey, where can I find these new companies? Where, Ian, do you personally source new companies that you bring into your portfolio? Well, that's what today's video is all about. Well, just as a first point, I'm not really actively buying new positions at this point because my portfolio, I would say, has reached a point where I need to be adding to the positions I already have. And in fact, I personally own over 30 dividend growth investing stocks. I think that's a large amount of stocks. I don't know if that amount is right for everyone. In fact, I would say that many people are going to do better with a more concentrated portfolio. That being said, it works for me. It's the right allocation. It's the right number of stocks. I would say, though, at this point, I'm not actively adding new positions above and beyond what's already in the portfolio. That being said, there is a time and a place where all of us in the dividend growth community are trying to add new positions to our portfolio. So I'm taking myself back in time, and I want to share with you all of the strategies today that I personally used to at least first identify stocks that I would consider for my portfolio, and then analyze, and then if they meet all of my benchmarks, make it into my portfolio. And that's important. Before I get into anything today, please keep in mind that just because I identify a stock doesn't mean it should go in the portfolio. This is literally today what I'm sharing is just the process of identifying a candidate, something that might make it to the watch list. It's only after I fully analyze the opportunity that then I would consider placing it in the portfolio. And I have done other videos on YouTube, and I will do many more in the future on how I actually analyze stocks once they're on the watch list. But before you can analyze anything, it's important at least to identify, is this stock even a contender? Is it even something that would potentially make sense on my portfolio? And so that's what I'm going to discuss today. So first strategy is a good one. Way back in the day, I would say maybe 20 years ago or so, I was like all about reading investing books, and I read stacks and stacks of books. And one of the books, or one of the authors that is, who came up time after time is Peter Lynch. He's a really famous mutual fund manager, managed one of the largest mutual funds ever. If I remember correctly, I think it was the Fidelity Magellan Fund that he was, he really became famous managing that fund. And Peter Lynch is a very special investing strategy that resonates with me. He typically invests in household brands, things that he recognizes. He'll literally, I remember from these books, look around his house. What are the products that my family uses? Who makes them? Are they candidates? And I kind of think an add-on to this strategy is your kids. If you have kids, what products do they use? What products do they like? Who makes them? Just look around you. There's so much around you. And the beauty of the Peter Lynch strategy is you're always going to be identifying potential investment candidates that are related to products, services, goods that you know and that you understand. And that resonates a little bit with the Warren Buffett strategy as well, where he likes to invest only in companies that he can fully understand. And obviously, if you're buying the product, you probably understand it to an extent where you would be comfortable taking it to the next level, analyzing the company and seeing if it's a fit for your dividend portfolio. What I also like about this first Peter Lynch strategy is Peter Lynch strategy lends itself to brands. And I really believe if one is holding a company for the long term, for 30 years or more, having a brand reputation and a great brand is quite important. So I always tend to gravitate in my own world towards positions that have brands. So how else do I source new stocks for the watch list? I would say another big one, and these, by the way, are in descending order of priority. So I'm giving you the best ones first, and they're in this order for a reason, and we'll get to that at the end. But the second one is the Dividend Aristocrats list. Just type it into Google, you'll find it. There is a list of these Dividend Aristocrats. These are the best dividend stocks. These are the ones that have managed to raise their dividend year after year after year for the long term. And the beauty of this list is it's very much geared towards the topic of my investment portfolio, which is dividend growth investing. And I imagine if you're watching this, you're interested in dividend stocks. These are the stocks that pay dividends. They pay a portion of their earnings to shareholders like you and me in the form of a dividend. And I imagine the goal of you, and I'll tell you my goal, is one day my dividend income will surpass all my living expenses. So obviously if I'm looking for dividends, the best place, or one of the best places to go, is the Dividend Aristocrats list, because these are all the companies that have dividends and consistently raise them for decades on end. Now, the great thing also about this list is these are the companies, they don't only have dividend, but they raise it each year like clockwork. This is important because I've done videos on this. Your starting dividend yield doesn't matter, in my opinion. What matters is what the dividend yield on your original cost is 10, 20, or 30 years from now. And I recently did a video where I shared one of my personal positions where I'm already yielding 15% yield on cost. And the fact of the matter is by buying into the Aristocrats list, or at least taking the Aristocrats list, putting it on your watch list, these are companies that have a track record of raising the dividend. And past performance is not an indication of future, but my suspicion is that many of the stocks on that list will continue to do what they've done in the past, which is raise their dividend year after year, which is really, really key to dividend growth investors. So where else do I find stocks? Here's an interesting one. Yahoo Finance. Once you have a company you like, or a few on your watch list that you like, enter them into Yahoo Finance. That's probably where you're going to find a lot of financial data to do your analysis. What you can also do when you're on Yahoo Finance and you enter a stock is it'll show you related stocks. People who searched for this also searched for this or for that. And what's great about that is it identifies other candidates. And they're not always in the same industry. Sometimes they're in different industries. They're kind of related, but they're not exactly the same. And so it's a great way just to see what other people are looking for who also have similar interests to you. And it allows you to look at it in an unbiased way in a sense, because it's just showing a stock. It's not showing commentary. It's not showing other people's thoughts. You're still finding these on your own. It's just using the knowledge of the crowd to your advantage. So how else? Well, you know what? I'm going to go to that. So another strategy after you've exhausted these strategies is, and this isn't a comprehensive list today, but we're going to start getting into strategies where you have to be careful, basically. Newspapers, magazines, newspapers like Investors Business Daily or Wall Street Journal, magazines like Money, Fortune, Forbes, Kiplinger's, all of these types of publications are great sources of new ideas. I like to read them. I like to see the trends. I like to follow the economy, and start understanding which companies are being written about. Now, be careful here, because you want to generate your investment ideas yourself. And this is really important because in dividend growth investing, you have to stick with something for a long time. You're basically buying a stock, you're going to be holding it for 10, 20, 30 plus years to see the huge benefit, the huge snowball effect of cash flow that can one day pay for all your living expenses. You need to have conviction. And if you're buying stock that you found in a newspaper or a magazine, just make sure you have conviction in it. You're not just reading about it, but when you read about it, cool, great idea, but you're taking it and you're really making it your own. You've got to own that stock in your mind. You've got to do the research. You've got to really buy into it before buying it, because the risk sometimes with taking other opinions is just that, is that when the times get tough, maybe the stock is down, are you still going to be convicted to even buy more maybe when it's down? You're like, yeah, I did my analysis. This is a buying opportunity. Or are you going to be like, wait a minute, maybe I shouldn't have bought that stock. I just bought it because someone else was talking about it and I don't have the conviction to buy when it's down. In fact, I feel like I want to sell it. Those are really two different scenarios. The second scenario, you really want to avoid that scenario. I've been in that scenario before. It's not fun. It's one of the bigger, I would say, possible mistakes that someone could make in the world of dividend growth investing. And that's why I prioritize this one a bit lower. It's a valid strategy, but do the others first. Last strategy that I'm going to talk about today is YouTube videos and blogs. I frequent all the blogs, YouTube videos. I'm doing YouTube videos. But someone asked me even on YouTube, Ian, what's your portfolio? What does it have? And I answered the question probably how the person didn't want me to answer it. I gave, obviously in my videos, I give a sense of what I own. I've talked about individual stocks in some of the videos, and you start piecing things together. But really the message that I wanted to share with that person is, hey, I don't want to share it all in one place because I don't want to bias you. And I don't want to get into a situation where people are just buying stuff because I've bought it, because that is not the way to go. It's not going to be how you have the conviction to stick with something that you really found yourself, you bought yourself, you researched and hold it for many years. And so that's why the priority is in this order. These are all great ways to find stocks for one's dividend growth portfolio, but prioritize them in this way, in my opinion, you're really, really setting yourself up for success. So one last thing worth mentioning today, or two last things, is when you're in this phase of researching stocks, you're buying new stocks, don't get into the situation where you buy too many. So it's very easy to get almost overexcited buying new stocks. And the risk there is you have too many positions. How can you manage them all? You dilute yourself. So when you find a really good stock, you buy another one, maybe not as good, you're spreading your money, you're diluting your possible performance. And so each time you buy a new stock, ask yourself, would this money be better spent adding to an existing position or buying a new one? And that's why I was saying at the beginning of today's video, I'm in the situation where I'm better off adding to existing positions at this point. And that's good. Everyone needs to make that up, make their mind up. And it doesn't matter whether you have one stock or over 30 stocks like myself. Even if you have one stock and you're thinking about buying your second stock, ask yourself, is this money better spent adding to the one stock that I own or buying the second one? And so that's a question you got to ask yourself each time. Second closing point today is industry diversification. When I typically buy new stocks, the reason is I want to diversify into new industries. It makes no sense owning 5 stocks all in the same niche. It's not getting me any diversification. If I own 5 stocks in one niche, there are certain niches where that makes sense from a risk management standpoint, but assuming it's not a very risky industry, sometimes buying all of the companies in the same industry, it's not really going to get you anywhere. You would have been better off buying just the best company in that industry. So what I like to do is I like to look at all of the industries. There's so many different industries. How can I get representation from all of them? And it doesn't have to be equal representation. It could be certain industry I want to overweight, certain industry I want to underweight. But when I diversify and I find these new ideas for my watch list, I like to venture and branch off into new industries rather than just overweighting everything in one industry and potentially diluting my performance in that industry when I could have just stuck with the best one. This is Ian Lopuk, ppcian.com. Just a friendly disclaimer today before I end the video. I am not a licensed investment advisor. This is not investment advice. I'm just sharing my passion here on YouTube. I am passionate about investing, about dividend growth stocks, and I am sharing that passion with everyone here on YouTube. If you are going to go out and invest in stocks or financial instruments of any type, please consult a licensed financial advisor first. Hey, thank you so much for watching. I really appreciate it. Please keep the great questions coming in. I've been getting a lot of great questions on YouTube, a lot of great comments on the videos. They fuel the topics for my future videos, so let's keep that going. I have many more on the way. The channel is growing, so I thank you for watching. Thank you for subscribing. This is Ian Lopuck. I will see you in the next dividend video.